Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw some pretty decent weakness in TF, which put in a pretty decent pullback, and similar story in NQ, some pretty decent weakness overnight. And given the weakness in NQ and TF, ES so far has held up pretty well, but we could get a delayed reaction in the S&P and then see a pullback down towards at least the 69.5 to 71.5 zone, and then for potential to test 65.75 to 67.75. And if the selling in the other markets continues, then we could even test lower. That's something we'll have to gauge in real time, because if the other markets kind of get exhausted short term, then ES could just come down to the initial support zone, 69.5, 71.5, find some buyers over there, because so far ES has been the stronger market, or pull back to 65.75 to 67.75 and then find some buyers over there and then just start balancing above those zones. But given the weakness in the other markets, at the very minimum, it calls for some caution on the long side in the S&P here. And as long as ES holds below 1980 to 82 quarter, the sellers can still step in, and the risk would still be on the buy side, and we could still get a pullback lower. Now, ideally, if the markets are actually weak, then ES should hold below 1979, and we shouldn't really see any, big pops up into initial resistance zone. But that's really the key inflection point on the upside. And if we get a break above initial resistance, then we'll know that something is off. And despite the weakness in NQ and TF, we're still finding some buyers in the S&P, and then we'll have to be cautious on the short side. But as long as ES holds below 1980 to 82 quarter, we do have that potential to go down to the 69.5 to 71.5 zone, fill the gap at 75, 71.5, and potentially 66 quarter. Now, whether it gets to 66 quarter or not, that's something we'll have to gauge in real time, because the other markets have already kind of put in a decent move, and at this point we might not get any big continuation moves in the day session. So that's just one scenario to be aware of, is that because we've already seen so much selling in TF in the overnight session, and the range is already quite wide, the day session could be relatively quiet. So that's the only other thought and the only reason to be a bit careful even on the short side. But as long as ES is hitting the zones, and we're not seeing any signs of abnormal strength in the S&P, the first plan of action will be to look for short setups in ES for pullback to 69.5 to 71.5. And then this is an area where responsive buyers could be active on first test, and it's a good target on the downside for any shorts. And we could get some rotation and some buying activity here. 65.75 to 67.75 is the better support zone though. So this can be used as a target, and then if you're still holding a position, then a push down to 67.75 would be an extended target, and a spot where, depending on how the market's shaping up in real time, maybe even try a long setup there if the other markets are also kind of exhausted and ES is also short-term exhausted. That's a spot where you could get a 3 to 5 point bounce even in a bearish scenario. So heading into the open, the main focus is going to be to look for a short setup down to 69.5, 71.5, and that's going to remain the plan unless we see some abnormal strength and just some clear signs telling us that this is not a market that's ready to break down. But at the very minimum, the weakness in the other markets does call for caution on the long side, and we just have to be careful fading and taking long setups at this point, just because the other markets have already kind of cracked and ES could follow off the open. So those are the main ideas heading into the open. Let's see how well the sellers can maintain control from the overnight session into the day session and take it from there.